Welcome back, folks. Welcome back, traders. This is video number 2 of my beginner ForEx series. So I'm going to translate this on Google Translate because I have a Spanish speaker in attendance. So bear with me as we go over the course material. I'm going to make short series videos, about 20 minutes apiece, introducing you to the Forex market. Okay, in video number 1, we covered the foundation. Remember, we are in the JCP app. We covered what Forex is, market size, common ways to trade, trading hours and sessions, best times to trade, the advantages and disadvantages of trading the Forex market. In this session, we will cover how to read currency pairs, 3 types of currency pairs, the nicknames of those currency pairs, how we calculate movements. We'll talk about lot sizes, the spreads, the different types of orders that you can submit when you are trading, such as limit orders, market orders. And we will talk about how to make money while we trade, okay? So the first thing that we want to discuss is how to read a currency pair, okay? And remember from section or video 1, we talked about you have to trade pairs, right? One currency against the other currency. And you have to understand that as traders, when we speculate, you know, when we speculate in the market, we look at the chart or the fundamentals and we decide that one pair is going to gain strength and another pair is going to lose strength, or one pair is going to become more valuable and the other pair will become less valuable. So when you look at a currency pair, you are going to see 6 letters, right? So the euro currency, the abbreviation is EUR. The US dollar currency, the abbreviation is USD. The Great Britain pound is GBP. The CAD is CAD. The Japanese yen is JPY. The Swiss franc is CHF. And so on and so forth. There are numerous currencies. So all we have to do is utilize our JCP app and it will show us the different currency pairs. The International Organization for Standardization has developed and standardized the written format of the 3-letter currency pairs. So if you are ever confused, you can always go to the website of the International Organization of Standardization. Okay, so what I want to do briefly is I want to talk about, I guess, the 3 types of currency. We have the majors, right? The majors consist of all of the US dollar pairs. So any a pair associated with the US dollar is typically going to be considered a major. I guess I shouldn't say any pair. Let's talk about them. The Euro USD, USD JPY, GBP USD, USD CHF, USD CAD or Canadian dollar, AUD USD, which is Australian dollar USD, and NZD USD. Those are all considered the majors. Those are frequently traded pairs, and they're all dealing with the US dollar. I want you to take note of which side of the equation that the USD is on. We will address that a little bit later, but it is important to notice what side the USD is on when we start quoting these pairs. Okay, let's talk about the minors, right? The minor or the cross currency pairs. There are Euro CHF, Euro Great British Pound, Euro Canadian Dollar, Euro Australian Dollar, Euro New Zealand Dollar, Euro Japanese Yen, Great British Pound Japanese Yen, Swiss Franc Japanese Yen, Canadian Dollar Japanese Yen, Australian Dollar Japanese Yen, New Zealand Dollar Japanese Yen, GBP Swiss Franc, GBP Australian Dollar, GBP Canadian Dollar, so on and so forth. Australian Dollar Swiss Franc, Australian Dollar CAD, CAD Swiss Franc, New Zealand Dollar Swiss Franc, New Zealand Dollar, Canadian Dollar. You can trade all of these pairs, and they are considered minors, okay, or cross pairs. Finally, you have the exotics. The exotics are important to notice that sometimes when you trade the exotics, there's not sufficient liquidity. And you can always tell when the liquidity is not sufficient by the spread. The spread will increase. The price that you have to pay to enter the trade will increase if you trade something that has a low level of liquidity. And some of these pair are the United States dollar, Brazilian real, the USD Hong Kong dollar, the United States dollar Saudi real, United States dollar Swedish krona, United States dollar Norwegian krone, the USD Russian ruble, the USD Polish zloty, and the USD Chinese renminbi. And I probably slaughtered that. But the point is, when you trade the exotic pair, you have to take note of the spread, because the spread is a fee that you have to pay to enter your trade. And you don't want to trade something that costs too much money to enter the trade. And here's why. If it costs you $42 to enter a trade, but you're only trading with a micro lot, it might be a losing trade, even if you win the trade with the micro lot, because the trade may only go 100 pips and you might receive $40 or $30, but you had to pay $42 to enter the trade. So you always want to be cognizant of how wide the spread is, okay? And we'll cover the spread here coming up. All right, let's talk about the nicknames of the currency pairs, right? Not that this really matters, but sometimes you'll hear people talk about currency pairs, especially in chat rooms, and they will use nicknames. So the nicknames for the US dollar are the greenback, the euro, single currency. You hear somebody call the British pound the sterling. You'll hear somebody call the Canadian dollar the loonie. CHF, Swiss franc, the Swissy. The Aussie dollar, they call it the Aussie. They'll call the New Zealand dollar the Kiwi. So those are important to take note. There's also two other pair. I want to say ICT refers to uh, the British pound as the cable, right? Um, it doesn't matter. You'll figure it out as you go forward. But those are the most common nicknames of the currency pair. So when you're in these chat rooms and people are throwing around nicknames, you won't be totally lost. All right, let me check for understanding here. Bebé, ¿tú entiendes?
Estás diciendo que hay varios tipos de moneda.
Otra vez.
Estás diciendo que hay varios tipos de moneda y que hay algunos que se les llaman exóticos y que aparte de eso hay unos que tienen apodos.
Sí. Sí.
Y estás explicando los nombres de los tipos de monedas que hay, porque sí he visto que hay bastantes tipos. Hay una lista bastante grande.
Sí. Okay. Perfecto. All right. So we will continue. The way that traders measure the movement of a trade is in a pip. Okay. The pip is the unit of measurement for the change of value between currencies. And in order to understand this, we have to um, do a small calculation before we actually start trading. Okay. And here's what I mean by that. I need to share my screen again. So bear with me real quick. Share screen. Three, two, one. All right, we should be getting my broadcast here. All right, here we go. So we need to go to photos. Okay, let's talk about spread. The spread, right? The spread in a currency pair is the price that the broker is willing to buy a pair for. That's the bid. The spread is the difference between the bid and the ask, right? So the price at which the broker is willing to buy the base currency in exchange for the currency rate. This is the best available price that traders can sell the currency pair at, right? If you are selling this, this is the price that you can get it for. If you are buying it, this is the price that you will get it for. This is always going to favor the broker, right? And here's the ask. The ask is the price that the broker is willing to sell the currency to you. You're buying it, they're going to sell it to you. This is the best price that you can buy the currency pair from your broker. I know it might be a little bit confusing, but trust me, you will start to understand this. The larger this spread, the more disadvantaged you are as a trader. So you always want a lower spread when you go to enter these trades. Okay, generally speaking, um, with these USD pairs, you want to spread under 10, generally speaking. And with the rest of the pairs, you want to spread under 30. Now, there are brokers that can offer you better spreads. Maybe there are higher fees associated, but you'll find that times of tight liquidity, you're going to pay more than that. And you don't want to do that as a trader. You want to wait until the spreads are in your favor. Okay, what is a pip? Okay, a pip is a percentage in point move. It's a unit of measurement. Um, that's how we measure how much we're getting paid. Um, and this is exactly how we do it. Any pair with the USD on the back of it, you're always going to count 4 decimal places over. And every movement of this number is 1 pip. So if this goes from 10.91 to 10.90, it went down 1 pip. If it goes from 10.90 to 10.91, the rise is 1 pip. Okay. It's very important when you start trying to calculate your pips, because you base everything that you do in Forex on your pip count, right? Because your pip count will determine how much risk you are applying to your trade idea. And remember, in video 1, I told you your number 1 job is to protect your capital. And the only way you can protect your capital is if you understand how much you are risking, okay? We don't want to talk about pipettes. We want to talk about a pip, okay? So the pip, when the USD pair, when the USD is in the rear, it's going to count 4 over, and that's going to be your pip. The JPY is a little bit different. When there's a JPY on the end, it's going to be the 3rd decimal place. So you're going to have a number over here, you're going to have a decimal, and it's going to be 3 positions only, okay? So in that case, you need to adjust your pip count to every 2. The 2nd position is where you start your account, okay? 1 pip rise for USD JPY moves, if it goes from 109.44, this is where you'll start your pip count, right? That's very important. I don't want you guys to get confused when it comes to calculating your pips, because it can be the difference between blowing your account and losing your money, or, you know, I guess having a good experience or a bad experience in Forex, okay? Do I have any questions over that? If you do have questions over that, you need to stop the video and do some research over how to calculate a pip in Forex. I'll say that again. Go find other videos that explain how to calculate pips in Forex. There are many, many videos that other people have already done. I don't want to recreate the wheel, but I do want to address the topic. So please understand that going forward, we should be expected to know how to calculate pips. Okay. We'll go back over here to the Forex University, and we'll talk about lot sizes. Lot sizes are another super important piece, okay? Because when you start talking about lot sizes can make or break you, right? So you know what a pip is. That's the, how price moves or whatnot. Um, the lot size is how much you can make as that price moves. I guess I should not have gotten out of here. But a pip is how price moves, and your lot size determines how much you make as the price moves. So we'll go back to my screen over here. Okay, what is a lot size? A lot size is a specified number of currency units that you will buy or sell. Okay, this is very important. I want you to look over here because when you go to enter your lot size into your MT4 trading application, you will enter the trade, the lot size just like this, a 1.0. That's a standard lot, and you're trading 100,000 units of that currency. That is, for the most part, on the USD pairs, this is $10 per pip. So you will lose a lot of money very fast if you're trading $10 a pip, or you'll make a lot of money very fast. You don't want to gamble, and you always want to protect your capital. So I would stay away from the one lot size trades as a beginner. Okay. Um, the mini lot, that's a 0.10. You're trading 10,000 units of the base currency, and it is basically $1 per pip. Still pretty expensive if you're somebody with a smaller account. I wouldn't recommend starting off here either. Now you're talking about the micro lot, a 0.01. You're trading 1,000 units of the base currency. And this is where I suggest that people start, right? A lot of places will not let you trade the nano lots. A lot of brokers won't trade nano lots. Um, so you don't have to worry about that. But this right here is 10 cent per pip. Most of us can handle 10 cent per pip. You know, it basically goes 100 pips, 100 times 10, and you can calculate your money that way. Okay. So hopefully everybody is good and there's a decent understanding here when it comes to lot sizes. Okay. And the way I'll give you a calculation of how to know exactly um, what you're risking, because there's a calculation that we have to do now that we understand the lot size. We understand what a pip is. And when we start going and getting our positioning, we'll have to do a risk management calculation that will require us to uh, to put all that information in. Okay. All right. Let's talk about pip value. We talked about the standard lot for every pip is $10. The mini lot for every pip is $1. The micro lot for every pip it is 10 cents. Most brokers do not offer the nano lot, so it's not going to be 1 cent for every move. If you get one that offers a nano lot, that's awesome, because most of us can handle 1 cent per every move anyway. That would be a great broker to have if you can trade nanos. Any questions? Okay, so now we need to go back and talk about the spread. We've talked about the spread a little bit already. When we spoke about the spread, we said that the spread was the difference between the bid and the ask, and that's what the broker charges us to enter a trade. So when you enter the trade, you are going to be in the hole, whatever that spread is. Okay, I'm going to take a screenshot of my MT4 so I can share it with the group. And it will show the spreads real time right now, which is about to close the market here. So I think I ran over time. This spread will allow you as the trader to decide whether or not you want to enter a trade idea based on how much it's going to cost you to enter this trade idea. All right, let me get this on my screen. Okay, so you can see how the spreads move. If I was to enter these ideas, it's becoming quite expensive. This is the close of the market on the New York session. So you see how the liquidity draws down and the spreads increase. You don't want to enter the market when you see the spreads like this. At this point, you can't enter the market because it's closed. But here in about an hour, they will reopen the market and the spreads will start to drop. But you don't want to enter a spread that looks like this prior to it dropping. You want to let the spread drop. Don't get FOMO. Allow these spreads to drop before you spend the money to enter these trades. Okay. We'll leave off right here. This is video number 2. We've learned several things. We learned how to calculate pips, lot sizes. We learned what the spread was. We learned uh, nicknames for currency pairs. We've learned what exotics are. A lot of good information. Please take the time to review. If you have any questions, you can drop them in the Discord, drop them in the chat, contact me, and we can get on a one-on-one. But this has been video 2 of your beginner Forex trading class. Thank you for attending, and we'll see you out in the markets.